It brings me no joy to bring you up to speed on a conversation that I had with the one and only incomparable Beth Traverso. Beth Traverso is, if you don't know, a top 1% agent in the nation. We are fortunate enough to have her come on the channel every Tuesday. And she dropped a bombshell yesterday. The video goes live today at 4 o'clock. Must watch. She indicates, at least in her area, which again, you have to remember is King County, AKA Seattle, AKA very tech heavy, is once again seeing bidding wars. And we are not talking one-off bidding wars. We are talking a buy box in her area potentially having 1 or 2 listings. And what they are seeing is buyers come back. Now, you have to remember a couple of things about King County. Again, we've been lucky enough to talk to Beth for 2 or 3 years now. So first and foremost, 1, the spring selling season in King County starts in January. A lot of the country is still frozen, frankly, and you are months away from the spring selling season. So again, just because it's popping off in Seattle does not mean it is in your area, right? You should know your buy box, your market. But that said, Seattle gives us an early indication of what is going on potentially with buyers. And we had a great conversation also with Danielle from Austin, again, a tech-heavy area. And what we are starting to see, without question, is buyers are sucking up 7% mortgages. We have yet to see supply pick up. And if you know my story of a broken housing market, we are not likely to see supply increase in any great numbers at 7% mortgage rates. Again, it is my hope that Seattle, San Jose, the Bay Area, Austin, maybe a couple of other cities that are tech heavy are maybe the only ones with bidding wars. Why are they having bidding wars? Well, I think there's a couple of things going on. First and foremost, a lot of the buyers in those areas obviously have stock wealth, stock money. And an interesting thing may have happened last Monday. If you don't remember what happened last Monday, DeepSeek came out and sank NVIDIA 17% in a single day. Now, it's come back from that and all of that. But again, remember, I've studied the consumer for 30 years. And one of the things that likely happens when a tech-heavy portfolio sees a 17% drawdown and then snap back is people realize, ouch, this wealth, this cash that I counted on can go away and go away quickly. So what happens? Well, if you are working for one of these tech behemoths and you have 300 grand, 500 grand, $1 million in RSUs, and you've been waiting to buy a home, it is not unreasonable for you to think now is the time. I'm going to sell my stocks. It's the beginning of the year. I'll pay the cap gains in 12 months. Not a big deal. And I'm going to buy a home. So again, listen to the video that comes out with Beth Traverso today at 4 o'clock. Bidding wars are back. We're talking 10, 12, 20% over asking. This is nuts. She is seeing people waive EMDs. If you don't know what that is like the most ludicrous thing I have ever heard of. And frankly, I would never do. That basically says, take my money, give me a shot, and I'm going to release the money. This isn't putting the money in escrow. This is having escrow wire the money to the seller. And if you don't close, they keep it. That is wild to think about. So again, must-see TV, Beth Traverso dropping knowledge and actual facts today. Again, my hope is it's very focused, Seattle, Austin, San Jose, the Bay Area, but we shall see. We've got a lot of Fed talk. Remember Sunday when we talked about the weekly calendar ahead, there's lots of Fed talk. We got stuff from Bostic, Goolsby, Powell, Daly, Jefferson, and more. Why don't we get into that? Why don't we just go through the Fed stuff? We'll do earnings next and some other goodies for you. Actually, you know what? Let's do this first. So the jobs report, right? Remember, we get 3 jobs report. We got the JOLTS report yesterday, which was disappointing. We got the ADP, aka private payroll, which was actually strong. The numbers are as follows. Last month was 122,000 jobs created. Expectations was for an increase to 150,000. Actual, 183,000 jobs created. Now, folks, you and I have been doing this together for 5 years. Over the last year, what has happened when the job market came in strong? You can go back and look. Rates went up, right? The job market is strong, rates go up. Now, I don't know what's going on this morning. I haven't dug into it in any great detail because I was preparing for our conversation. But the 10-year note is down big today. In fact, it is down so much, it would not shock me if Lance Lambert from Resi Club put out a note in a couple of hours saying mortgage rates are sub 7. It's a massive move. I think it was down 9 basis points, which is crazy for a single day, and actually just a morning session. So I don't know why that is. Historically, good news has been bad news, meaning rates go up. But now good news is good news and rates go down? I don't know. If you know why rates are down this morning, do me a favor, leave comments in the notes below because I have to do some research. I was reading so much stuff this morning, I did not have a chance to dig in. So if you could tell me why rates are down so big while the job market is strong, let me know. I'd love to hear it. All right. So what are some Fed presidents saying? And again, this is important because I think what we're going to see over the next several weeks is some Fed presidents want to cut, some people don't. So we got to figure out who's who in the zoo. We'll just start at the top. Barkin. I expect the 12-month inflation numbers to come down nicely. Again, you and I have been talking about for 6 months how the base effect over the next 3 months is supposed to look good. We've also talked about the shelter cost continuing to roll over, but roll over slowly. So Barkin is basically counting on that. Barkin also talks about 2018 and 19 tariffs. Yes, we have seen this movie before. Yes, we have actuals that you and I can go look at. According to Fed President Barkin, the round of tariffs in 2018 and 19 added about 30 to 40 basis points to inflation. Now, you got to remember 2018, 2019 inflation was basically zero or very low, so the increase was not felt. However, if you are in an environment where I think what was PCE just like 2.8 the other day or 2.6, if we add 0.3 or 0.4, we're back up to 3%. So it is a very different game today. Next, Bostic. Firms, meaning companies, say they will pass on 100% of the tariffs to consumers, right? Remember, with tariffs, there is an opportunity for companies to eat margin, at least in the short term. According to Bostic, not going to happen. They're going to pass it on. Next thing Bostic says is tariffs, we are going to have to just watch, right? There's not much they can do to plan for because they come, they go. We don't know on what. It's just a lot of data. So they will have to be reactive. They're not going to plan for this. How about Goolsbee, Fed President Goolsbee? The underlying economy is on an excellent path. Goolsbee, I think rates will be lower in 12 to 18 months. Folks, you got to remember, what is my bet? 2025, no cuts, no cuts. If we have one, it will be one and it will be late. Fed President Goolsbee is essentially saying the same thing. Powell, Jerome Powell, the guy at the top, says uncertainty is always with us. Fair enough. Daily, the Fed is at a good position to wait and see. She also said the Fed can take its time. With all of these comments, one thing that I think should be happening is the odds of a March rate cut should be collapsing. We'll go to the Fed Watch tool later this afternoon and see what's what. But yes, clearly a lot of these conversations are trying to take a March rate cut off the table, in my opinion. Fed President Jefferson, Vice Chair Jefferson. Fed expect rates to decrease in the medium term. I do find it convenient that he doesn't define the medium term, but typically speaking, you could think 6 to 18 months would be medium term. There is no rush to change policy stance. Again, they're trying to take March rate cut off the table. We're not done. I think we've got a couple of more. I think we got Fed Vice Chair Jefferson again. Remaining cautious on rates as policy drama plays out. Again, basically the Fed's going to sit in the stands and watch with popcorn. Fed, again, Vice Chair Jefferson. I still lean towards cuts this year. Okay, that's interesting. Actually, you know what? That wasn't Jefferson. That was Barkin. My mistake. My notes got messed up. So that's Fed President Barkin. I still lean towards cuts this year. A couple more from Barkin. CEOs are not talking about a recession. And then finally, no evidence of overheating. So again, essentially the Fed is telling us with these series of comments, the economy is doing fine. They are going to watch and see what Fed President Trump, they are going to watch and see what President Trump does on tariffs. They are not going to get ahead of it. They are just going to wait. And again, I think it is very clear they are trying to take odds of a March rate cut down. Other things I read this morning, we go through some earnings. We got some earnings updates. Alphabet, aka Google, cloud revenue missed. They also committed to a shockingly high capital investments in 2025 of $75 billion. They missed on revenue, but however, they beat on earnings. So they didn't sell enough ads. That's top line. And they beat on earnings, meaning profit at the bottom line. Chipotle. Wow. I need more coffee. Same store sales rose less than expected. They also indicated that they only get half of their avocados from Mexico. So there's no concern about avocado prices at Chipotle. Snap beat top line, beat bottom line. AMD beat top line, bottom line, but data center sales fell short. So I'm going to guess AMD is getting hammered. What does Bitcoin Man say? Oh my goodness. Bidding wars have never stopped in the Chicago suburbs. Wow. Folks, let me know. Where is your buy box? And are you seeing bidding wars? Now, again, bidding wars I'm referring to below the median. What is going on? Beth Traverso's video this afternoon at 4 o'clock is must-see TV. You'll see my face go ghost white, I think, when she dropped that knowledge on me about what is going on. It's crazy. A couple more earnings real quick. We got Uber. Uber out this morning, beat top line and bottom line. And then finally, Disney also beat top line and bottom line. However, they did lose 700,000 subs on Disney Plus. A couple more things to think about, but let's talk about our amazing school community. I want to congratulate Dylan for joining school in the last day or so. Also want to let you know that we are going to have a live session just for school members on Friday at 8 a.m. We are going to bring CJ, the director of claims over at Steadily, to talk to you about insurance, underinsurance, claims process. He will undoubtedly share some stories. If you are a landlord, again, remember, Steadily only provides insurance for landlords. Get in that session, ask questions, talk about umbrella insurance, bring your what-if scenarios. CJ, again, has seen it all. He's been in the industry about a decade, and he will be with us 8 a.m. Friday. I will put it on the calendar as soon as this is over. Also want to shout out Heath. Heath is a school member, and Heath let us know that disrespectful offers work. Folks, I keep telling you, get a buy box, watch days on market, look at stale inventory, ride offers. Now, I will let Heath share his story. It is inside school, but here are the rough numbers. There was a house listed for $200,000. After watching it and following up and doing what you do, he bought it for $145,000. $145,000. That is a $55,000 discount on a $200K home. Disrespectful offers work. Go get the details. Let Heath know he did it well. Again, it's not easy. It takes time. It takes follow-up. But you know what? It's worth it. Worth it. One of the things that we do have to start to consider, and Anna Kelly has brought this to us for the last year or so, is stagflation. There is a way that you could look at rising, tariffs, the subsequent rise in inflation, and the low growth. We could be entering a stagflation environment, which will leave the Fed in a catch-22. What do they fight? Do they fight inflation? Do they fight a weakening economy? It will be interesting. I suspect we will see them fight the economy, but hey, you never know. Anything else we got here? Oh, mortgage apps. Remember, mortgage apps took a big dive last week. They actually, again, last week down 2%. Forecast was flat. However, they actually went up 2.2%. Again, kind of validating what Beth Traverso told us, that buyers are done, at least in a couple of markets. Let me make sure I got everything for you. Yeah, again, let me know about the 10-year. Anybody explain to me why jobs are strong and the 10-year's down? That broke trend. One of the things we look for is trend reversals. For the longest time, a strong jobs number meant rates went up. Today, we got a strong jobs number and rates went down. That's interesting. That's different. We should look into that. So if you have any ideas, let me know in the comments below. Also, remember, our Vegas event is 10 days away. You can still get your virtual tickets. Go to Eventbrite, and I hope to see you there. Have fun, join school, get to the event, and at the end of the day, just have a great day. Like, subscribe, comment. We'll talk to you tomorrow.